of Trust under Section 12A and AB of IT Act 1961. We heartily welcome our today beloved speaker, Dr.N.Suresh sir, to occupy the dais. I request all to please rise for our CA motto song.
सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शितः सर्वे तदूनात्यतीतश्चन एतद्द्वैत 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 एतद्द्वैत
Please be seated. UFO video will be played.
Arthashastram, Dharmashastram cha. Meaning, economic principles, earth, and ethical considerations, dharma, which are central to the work of accountants. The entire world is deliberating about impact of climate change coupled with disruptions of artificial intelligence. India has given philosophy of Vasudhaiva Kutumbakam to the world and successfully hosted G20 summit on this theme and also launched Global Biofuels Alliance. The accounting profession also has an enormous responsibility to guide the work where accountability meets innovation so that vision can be converted into solution. The Institute of Chartered Accountants of India, being the world's largest accounting body after the successful hosting of WCOA 2022 and GLOBAC, proudly presents before the World Forum of Accountants 2025. Accountability meets innovation for a sustainable planet. The world's brightest minds will exchange insights, explore emerging trends, and unlock the possibilities for the profession, where foundation will be laid to shape the vision for the future of accounting profession. Hosted at Yashobhoomi, the largest convention and exhibition center in the heart of India's capital, New Delhi, inaugurated by the Honorable Prime Minister Shri Narendra Modi, is all set to host the congregation of accountants from around the world. And while you're here, experience the vibrant culture and heritage of New Delhi, a city where history meets modernity, offering unforgettable memories.
World Forum of Accountants, an experience of 3 days, insightful discussion, groundbreaking innovations, and unparalleled networking opportunities.
With immense pride, we invite you to WOFA 2025, taking place, happening from January 31st to February 2nd, 2025 at the magnificent Yashobhoomi, New Delhi. Experience 3 days of insightful discussions, groundbreaking innovations, and unparalleled networking opportunities. World Forum of Accountants 2025 is where you need to be, where accountability meets innovation, AI for a sustainable planet. Join us at WOFA 2025 from January 31st to February 2nd, 2025 at Yashobhoomi, New Delhi. For more details, visit wofa.icai.org.
It's my pleasure to introduce Dr.N.Suresh sir. He is a graduate in Commerce from Bangalore University and a fellow member of the Institute of Chartered Accountants of India. He did his PhD on the following subject: taxation system and practices in India, NGO, NPO, legal system and practices in India. He has authored several books and articles on various topics relating to corporate law and taxation. His recent book, A Practical Approach to Taxation and Accounting of Charitable Trust, NGO and NPO 2014, 10th edition. Interesting issues on charitable trust or institution, NGO and NPO 6th revised edition. A Practical Approach to Foreign Contribution Regulation Act 2010, 7th revised edition. Provide an exhaustive coverage on practical illustrative of various topics including taxation, FAQ on NGO and NPO, income computation and disclosure standard, studied a corner in Q&A format, 7th revised edition, comprehensive cover notified ICDS to be followed by all assessees with a practical approach in Q&A format. He is the prolific writer and authoritative speaker. He has presented several papers and given lecture at seminar and conference conducted by the professional bodies, study circle, various branches of Institute of Chartered Accountants of India. He actively participated in various public forums addressing various issues and have been visiting faculty at the National Academy of Direct Tax, Nagpur and DRTI, Bangalore and Chennai. Thank you for your presence to today's topic. Thank you very much, sir. I request C.A. Ganesan sir to present shawl and memento to our speaker. Hand over to the speaker.
Good evening, ladies and gentlemen. It's a pleasure and honor to be here to talk about on the formation, documentation, and the registration under section 12A and 12AB of the Income Tax Act 1961. So let me at the outset I thank SIRC for giving me an opportunity to discuss with the members. In fact, on the May 18th I came and discussed on the various issues arising out of the assessment proceedings. At least about 45 issues were discussed at the time. Now focus is mainly on to how to form the trust, what and all to be looked into, and how documentation to be prepared. In the recent time, quite a number of litigation has cropped up because of the faulty of in preparing trust deed. So special attention need to be paid for documentation. So with this, let me start with, there are two aspects that I have bifurcated. One is on the formations aspect. So the formation aspects that we dwell upon on the basic concepts of the charity, and then the basics of the formation and meaning and concepts of the trust. What are the ingredients to constitute as a trust and how to prepare the trust? All those things will be covered. The second aspect will be with regard to how the registration process begins. Then what are the procedure subsequent to filing application under section 12A 1AC, what are the procedures for granting or rejection of an application. And after that, once the application is rejected or granted, there is no issue. Once it is rejected, what is the next course of action to be taken? These are the issues. Plus, there are interesting cases have come in the recent time. While making an application, certain mistakes are happening. The code, mentioning of the code, there was an error. Just because there was an error in mentioning the code, applications were rejected. Is it a right on the part of the commissioner to reject the application? Is it a curable defect? There are already some decisions have emerged from the court. So these are the aspects that will be covered. In addition, if you have any interesting questions that will be answered, I will try my best to answer it. Then, the issues are quite a number of that issues that you have dealing with charitable cases. So I wrote the first book on the commentary on taxation of charitable trust. The first edition was 2014. Now the latest was the 10th editions have come. And in addition to that book, because it's a commentary, many chartered accountants, most of the trustees, they said, it's a very sizable book. Can you make it as a short form of book for us to read? Then I attempted and authored a book, an interesting issues on charitable trust. The first edition was published in 2016. At that time I captured about 2,000 questions. Now I have covered almost 4,000 questions, covering section 215, section 11, 12, 13, ATG, 1023C. So you can imagine when the 4,000 questions could be covered only with 5 sections, what amount of issues involved in it. So now let me come back to the topic, formation of trust. How do you form the trust? But before you form the trust, you have to have a clarity on what is the concept of charity. What is the meaning of charity? Because most of the charity and trust goes together. So let us understand the meaning of charity. What is charity? It is a human to think to do something favorably to others. It is a human instinct. The expression philanthropy, if you look at the expression philanthropy, that is a Greek expression called philanthropos. This expression means love for humanity, love and passion for love for humanity. So this philanthropy, then doing the character of a person to do something favorable to others without expecting anything in return. That's called the charity. So if you look at the common parlance understanding, when I say I do charity, it means a pious act, doing something without expecting in return. If you are doing something, expecting in return something, it is not a charity, because selfless act is the one of the bedrock condition to say this is called charity. If it is a selfishness, then it goes out of the concept of charity. So same principles have been brought even under the Income Tax Act. The selfishness is covered under section 13. Selfless act is covered under section 250 to section 11. That provides an exemption. If something the board of trustees do something selfishly for themselves without for the public, section 13 comes into play. This is how the income tax has been carved out. So now these are the principles which has been brought in the definition of charitable purpose under the Income Tax Act 1961. The Income Tax Act gives an inclusive definition of charitable purpose. It never says what is charity. To understand this concept, case went up to Supreme Court. See, the simple word charity to understand, case went to Supreme Court. In sole trustee lok shikshana trust case, there the Supreme Court said, charity means altruism. That means altruism doing to the public without expecting return. That means doing for the benefit of others is called as a charity. Now this inclusive, though Income Tax Act does not talk about precisely the meaning of charity, but there is an inclusive definition called charitable purpose. This is defined under section 2 within brackets 15 of the IT Act 1961. If you look at that, it has different limbs. Prior to 2014, there were only 4 limbs. Subsequent to that, many more limbs were added. Prior to 2014, relief of the poor, medical relief, education, advancement of general public utility. Those are the objects. Then they have brought yoga, they have brought preservation of environment and all. In fact, in the Bangalore Tribunal, way back in 2006, case came up. When application fight was in Yoga Institute, they were conducting yoga, different branches of the yoga. When application was filed for seeking registration, the CIT has flatly refused, saying that it is a religious activity, not a charitable activity. Then this matter was taken up before the tribunal. And in the course of the argument with the tribunal, I have argued saying that yoga, what is this yoga? What are the ingredients of the yoga? How do you say this is the religious? I gave an example to the honorable judges. You know, during the curriculum of our education, we have had a class called PT, physical training. It's a part of the curriculum. When physical training was a part of the curriculum, the broadest term yoga comprises of all this together. And you can't dismiss saying that this is a religious activity. It is a part of the education to be treated. And after 7 years of this judgment of the Bangalore Tribunal, because the Income Tax Department did not appeal before the High Court, this became a landmark judgment in the Bangalore Tribunal. Then in 2014, law was amended. Yoga was brought in the branches of education as a charitable object. So now you have about 6 different types of this charitable purpose. It is very difficult to draw a line between each of them. Suppose relief of the poor. What is relief of the poor? There are the downtrodden society. In the downtrodden society, if you do something to them, it's the relief of the poor. Suppose you provide an education to the relief of the poor. Will you say it's education or will you say relief of the poor? Likewise, the medical. If you provide some medical treatment to the poor people, Will you call it a relief of the poor or the medical relief? So therefore, these overlaps each other. It is very difficult to define under which category that it falls. Then the residual class comes advancement of general public utility. So those, when you are doing for the public at large, not falling any other head, then the residuary class called advancement of general public utility, it falls into. See, categorization of which object limbs it falls has a very significant role. I will give you the recent judgment of the Karnataka Bangalore Tribunal relating to the Mangalore case. They provide financial services to the downtrodden people like vegetable vendors and hawkers on the road. They lend money, they collect interest, they borrow money from the banks at 10% interest, lend this to these people at 15% interest. The jurisdiction ever took the view, you are engaged in money lending business. Because you borrow at 10%, you lend it at 15%. Your intention is for the profit, therefore, you do not deserve to be granted an exemption under Section 11 of the Act. Therefore, they have been brought into tax. Why he has taken the decisions? Because 2008 law was amended. In the definition of charitable purpose, they brought a proviso. If trust or institution engages in providing trade, business, commerce, or engage in services, then it is tracked as a non-charitable activity. As a result, you don't get an exemption. So now the AO said, because you are money lending, therefore you do not deserve, it is hit by the proviso, therefore you are not entitled for exemption. Question came up. Because this proviso will comes into play when you have an object called advancement of general public utility. That means in the pursuance or in the furtherance of the object of advancement of general public utility, if you engage in any trade, business, commerce or rendering of services, then proviso will apply. As a result, you lose exemption. So now the question came up, when I give money, lending money to the vendors or the small downtrodden people, should it be called as the relief of the poor? Should it be called as the advancement of general public utility? This was the question raised by us. Then it was argued, look, downtrodden people will not get financial assistance from the banks because if they ask for security, they can't be able to provide. Unless there is a special scheme. Even for the special schemes, they would ask for the guarantor to be provided for. Whereas I give money not on security, not on the guarantee, on the face of to help them to come up in their life and improve their standard of living. So when I provide this money to them, I am intending to help the downtrodden people, not for the commercial. You should not look at from the commercial gain. Even in case of any trust or institution, either you may have profit or you may have surplus or you may have loss. You can't match with the income and expenditure together. It is impossible. So therefore, just because I have a surplus, don't construe that I am engaging for a business. Ultimately, two honorable members, third member also came in. They looked at these matters, whether it falls under advancement of general public utility or relief of the poor. Majority of the judges have expressed the opinion it is called relief of the poor and not advance. So why I am saying is that you should have a clarity in thinking. When your clients are engaged in an activity, which object they fall. So now the onus lies with the chartered accountants who conducts the audit, who gives a audit report in Form 10B, where classification has to be made on the each category of the objects. How much amount has been spent? When that being the case, you must have clarity on the concept and principles of each of the objects. Okay? Now we'll come back to the basics on formation. Yes?
Sir, in the case of an education institution where they are
Give the mic to him, please.
Sir, in the case of education institution which is running a school, so the institution is also having some agricultural property. So this they use this agricultural property, do the farming activities and sell the produce. So this income will it be treated as like coming under the advancement of general public utility or still under the education? But because the proceeds from this agriculture produce is being used for the purpose of education only.
Exactly. I don't know whether I have an instinct of your thinking. I brought out a slide, agricultural income. Okay. Probably in due course I will discuss. Not only this, there are various other interesting issues on that. Probably 10th slide may be agricultural income with the same intentions I brought it. Okay. I will discuss that.
Thank you, sir.
Now this basics of formation, Now what kind of, I have a charitable object. I have in mind to do something to the society. But what do I do? What kind of form that I should select? What kind of form I should do? So most of the clients will approach you. They may ask, I want to do charity. Then they will ask you, please suggest what do I do? If you suggest trust, they will say, why not society? If you suggest society, they say, why not Section 8 company? Then if you suggest Section 8 company, why not MOP? So these are all some conflicting issues they will always, because they will just quickly Google it and say, no, that's society may be far better. So you should be a champion to tell them what kind of formation to do. In fact, if you look at the book, in chapter 10 I have discussed the formation. How do you select which forum that you have to select, and what are the factors that you have to look into while selecting either a trust or a society or Section 8 company. Now in India, the concept of trust began in the 11th century. It was in the 11th century. That point of time, most of the time there was only prevalence of oral trust. Because the world was considered as a trust. And that's the most simple form to constitute is a trust. At one point of time, there were no other specific enactments. Later on, the first started with Bombay Charity Act. Then other states also started following the similar one. I think Tamil Nadu also probably you will have Tamil Nadu Charities Act, Andhra Charities Act, Kerala Charities Act, Delhi, all except the state of Karnataka and other 4 states where we don't have a specific enactment. So you will form a trust. That's the most simple to constitute as a trust. Then comes society. Of course, you are all familiar how the society is formed. Similar to that is with regard to the charitable objects, because your objects talks about whether you are a charitable institutions or not. If the objects which are in the nature of charitable, and these objects are for the public, then you can constitute a society for the purposes of claiming an exemption. Then the next is Section 8 company. Formerly it was called Section 25 company. Then in 2013 Act, Companies Act, it has been brought as Section 8 company, where you have an objects. These objects, if it has the character of charity, then it is called Section 8 company. And there is another specific branch of a liaison office, branch office also. I don't think you would have had an exposure in this regard, but we tried and we succeeded in the past. Constituting for charitable purpose, foreign company can set up a branch for carrying out of the charitable objects. Then the issue came up. Ministry of Finance and the Ministry of Home Affairs. Because any foreign funds moving into the India in the form of contribution is governed by Foreign Contribution Regulation Act, which comes under the purview of Ministry of Home Affairs. Whereas setting up of a branch office comes under the Ministry of Finance. So issue came up. When it is in the threshold of the Ministry of the Home Affairs, how Ministry of Finance can give a permission to set up the branch office? Finally, this matter was resolved in 2017. Any branch which has the character of carrying out charitable object, prior permissions to be obtained from the Ministry of Home Affairs, then Ministry of Finance will give the permission, Reserve Bank of India will give permission. Now we will move on to the next definition of trust. What is a trust? What it means? I think all of you are so trusted friends. What's the meaning of trust? What do you say for trust? See, you have to do trust deed. To understand the trust deed, you must know principles behind the meaning of trust. If you look at the Income Tax Act, there is no definition of trust. Absolutely there is no, in section 11, 12, 13, they have used very commonly the expression trust, but no definition of trust under the Income Tax Act. Therefore, to understand the basic concepts of the trust, let us take a common meaning. What common man looks at it. Trust is a matter of confidence. When I say I trust you, or you say you trust me, it means a confidence. I reposing confidence in you. Are you reposing in confidence in me? It's called as a trust. Section 3 of the Indian Trust Act 1882 defines what is a trust. Very interesting definition. So there they say trust is an obligation annexed to the ownership of the property. Trust is an obligation annexed to the ownership of the property for the confidence reposed in by the settlor or the trustees for the benefiting of others. So there also it says trust is an obligation annexed to the ownership of the property. If I ask you to do something without transferring money, what do? Therefore, section 3 says it is an obligation annexed to the ownership of the property. Property, don't misconstrue this is immovable property, anything. So that has to go together. Then for the confidence reposed for the benefit of others is called as a trust. It's called trust. And this trust has a historical importance in the country. Now, let us understand the concept principles of private trust and the public trust. There are as many as 24 different classifications of trust. I have explained in the book. However, for the purposes of Income Tax Act, it is suffice to know what is private trust, what is a public trust. So what is a public trust? Public trust is a trust where the object of the trust is thrown open to the public at large. The people at large gets the benefit of the objects of your trusted institution. Secondly, when I say public, it means you cannot count them in numbers. If I say public, how many are there? Is it 100, 200, 300? How many are there? So therefore, you can't count them. When you can't count them, then it assumes the character of public trust. Firstly, the benefit goes to the public at large. Secondly, you can't count them. So, from the trust deed you have to make out, is it a public trust or is it a private trust? Because normally even the department raises a litigation in this matter. Because character of public is primary importance for granting registration and exemption under Section 11 of the Income Tax Act. So when you can't count them, large number, when you can't count them, it assumes character of public. Whereas a private trust is the trust where the beneficiaries are identified and it can be counted. Maybe beneficiaries may be 5, 20, 30, 40, 50, any number. As long as you can identify them, count them, then it becomes a private trust. Secondly, the object of the trust goes to the benefit of these people whom we have counted. Whereas in the first case, public goes to the public at large. And whereas in case of private trust, it goes to the selected numbers. Say for example, your SIRC, is it a public trust or a private trust? Is it a public or a private? People are sitting here, is it public or a private? So how many subscribes to view private? That means you don't fit for an exemption. Tax law exemption cannot be provided to you. Very interesting case came up. Jodhpur Chartered Accountants Society. They filed for form for 12A registration. Maybe at that time very small numbers were there in Jodhpur. Commissioner of Income Tax took the view. You are a small section of society and you have a small section, specific numbers that you are having here. Therefore, it is a private, exemption cannot be provided. Flatly refused to grant an exemption. 12A has been rejected. The matter was challenged in the court. There the interesting issue came. What is the meaning of public? There was a landmark judgment of the Supreme Court in Ahmedabad Rana Trust case. In that case, question came up. It was reported in 81 ITR. It's a very interesting case. There they say, because of the expression public everywhere used, what is the definition of public? You mean to say every person in this country should get the benefit of your trust to say this is a public? And what is the meaning of this public? There the Supreme Court said, even the cross section of the society, you have a wide section of population, small section of the population from the white section of the population still constitute as a public. As a result, now Jodhpur Chartered Accountant, you have a white section of society. Maybe how many numbers are there? But 3 lakh members. Out of this, you are representing maybe 150. It is a cross section of the society. Therefore, considering the objects of what you are doing, that is conducting the classes and providing an education, training, seminars to the public, it is said to be a charitable institution. You deserve 12-year registration. Registration has been granted. So when you look at the trust deed, you should be very careful looking at who are all the beneficiaries. Public or a private or a cross-section of the society. When the issue comes us, you should be able to substantiate these matters. Okay? Now, and the third is called charitable or religious trust. Charitable or religious trust. See, section 11.1 talks about only for charitable or religious. Now, what is the meaning of charitable trust? Charitable trust, those trusts which has the objects of charity as defined, falling under the definition of section 215 of the Income Tax Act. But what is religious? There is no definition of religious under the Income Tax Act. And it is so difficult to define what is religious, because it's a matter of faith and karma. It is a matter of faith. One would follow. Now the next issue is charitable and religious. This is called charitable or religious. Another category called charitable and religious. That means your trustees will have an object, array of objects of both charitable and religious put together. It is called charitable and religious. Maybe after some time I will discuss whether those charitable and religious trusts are they entitled for 12-year registration or are they entitled for an exemption under section 11 of the Act. Okay, let me go over to the next slide. What are the valid trusts and what are the things to be complied to constitute as a valid trust? In order to say that this is a valid trust, firstly you must have an author or a settler. That means he is the person who brings his wishes in his mind to do something to the public. He is said to be an author or called settler. Sometimes he is also called as declarer. Then you must have an intention to create a trust, because in the deed he must express very clearly that he is intending to create a trust. Thirdly, that you must have trust property. Now, what is a trust property? That means the property, author ceases to be the owner, trust becomes the owner of the property. It is also called as a divestiture. This is the most important conditions. If you do not comply this condition of having a trust property in the deed of trust, then it becomes invalid trust. Then in the next slide, divestiting, I will discuss that also. Then trustees, of course, you have a trustees. You need to have a trustees to carry on the trust. But how many numbers to be there? How many numbers? Act doesn't talk about. Sometimes what happens, author himself occupies as a dual position. Firstly he becomes an author, secondly he becomes a trustee. But most of the time what happens, when you go for a registration of deed of trust, Unless they find two numbers, they will reject. They will not accept for registration. Because their mind works that there should be minimum 2% should be there. One person cannot himself constitute a trust. But under the law, there is no binding force. You must have a second person. Because author himself occupies the dual position, author as well as the trustee. Then beneficiaries you must have. You must define the beneficiaries. Who are all the beneficiaries? So normally in the deed of trust that you will say, public, irrespective of caste and creed, will get the benefit of the objects of the trust. So you have to define the beneficiaries. Then you have to define the objects. What for that you are creating this? What for you are making this trust? What are the objects? Again, objects that you may go to the definition, you may have relief for poor, you may have medical, you may have education. And then the residuary clause advancement of general public utility. You have to define unambiguously the objects. If the objects are not clear, then it does not constitute a valid trust. Even the Commissioner of Income Tax will reject the application if the objects are not clear. So these are the minimum requirements that you have to look into this. Now we'll come back to the next slide called the divesting of property. See, it's very interesting. Now, if you look at the definition of Section 3 of the Indian Trust Act 1882, it says, it is an obligation annexed to the ownership of the property. I said, obligation annexed to the ownership. If the property is not annexed, then it is an invalid trust. So what is the meaning of property? In what sense the expression property has been used? In J.K. Barowa trust case, CAT versus J.K. Barowa trust case, it was also noted in 106 ITR. In that case, issue came up. What is the expression property? There the Calcutta High Court held, property has been used in the widest sense. It has been used in the broadest sense, in the widest amplitude. It need not be misconstrued as only an immovable property. It comprises of immovable, movable property, and every interest in the immovable property is called property. It includes both movable, immovable, interest in the property. When you say movable, it includes even cash and the bank balances. So when the trust deed is created, the author has to move some property in favor of the trust. He should ceases to be the owner, trust becomes the owner of the property. That's why in the trust deed, when you look at it, most of the time the author says, I am hereby giving a voluntary corpus donation of ₹5,000, because that's very, very important. If that is not moved to the trust, then it is an invalid trust, because divestiture should happen. That means the author should cease to be the owner, trust becomes the owner of the property. So it so happened before the Kerala High Court, a wonderful drafted, a craftsman work was done in preparing the trust deed. It's a wonderful one. And they applied for 12A registration. So Commissioner has looked at it. Then he said, where is the divestiture of property? Because it's absent. Because it was absent, he said it is an invalid trust. 12A will not be granted. He is rejected. The matter went up finally to the court. Court has affirmed the views of the Commissioner, saying that unless the divestiture happens, unless the property moves in favor of the trust, in general principle, it becomes an invalid trust. Therefore, every trustee, author has to transfer in favor of the trust some amount or some property, without which it becomes an invalid trust. If it is an invalid trust, then exemption registration will not be granted. Okay. Now, creation of the trust. How do you create the trust? Simple. How do you create a trust? So normally, most of the time, we borrow trust deed, make a trust, and just goes with that. But it's important to know, how do you create a trust? Now, what are the conditions that you have to comply? If you look at section 7 of the Indian Trust Act, again, if you go to the Indian Trust Act 1882, they say that trust can be created by a person who is competent to enter into a contract. And in case of the minor, with the permission of the civil court, principal civil court, guardian can represent. This is the stipulated under the Indian Trust Act 1882. If you look at who is competent to enter into a contract, you have to go to section 7 of the Indian Contract Act 1872. If you go to section 7 of the Indian Contract Act 1872, it says, person who is competent to enter into a contract and person of sound mind is only permitted to enter into a contract. That means the person of, in order to become a competent to enter into a contract, if you go to the Hindu Minor Act of 1956, it defines he must have attained the age of 18 years. Those who have completed the 18 years, then they are competent to enter into a contract. If not, then permission from the principal civil court to be obtained to represent as a guardian. Then person of sound mind, person of unsound mind cannot enter into a contract. Person of sound mind. Sometimes what happens? Person will, sometimes she is sound mind, sometimes she is unsound mind. Sound mind attributes to the rationality. Rationality taking the decision. When a person who is sound, who takes the rational decision at the time of signing the trust deed, he can. If not, he cannot. A case has surfaced in the recent time. Father has huge properties. Daughter and a son. He is aged about 64, 65 years. Because there were some issues among the families. Daughter went there, got a certificate. My father is unsound mind. Actually, he is a sound mind. She got a certificate and proved that he is unsound mind. Therefore, any transaction he makes it up is disputed because of unsound mind. So now in case of the trust too, he must be attained the age of majority and he must be sound mind. He should not be an insolvent. Any insolvent person is not competent to enter into a contract. He is debarred from executing the trust deed. So now issue came up once again in the Kerala High Court only. Trust deed was executed and for 12 application was filed. Then Principal Commissioner, that time Commissioner of Income Tax, noted the person where they have referred, he was only a minor. Out of the 4 people what they referred, one of them was a minor. Then he refused to grant the registration because there was no approval or the permission from the civil court. Therefore, to make it a more valid trust, people must have attained the age of maturity, he must be solvent, and he must be of the sound mind. Now the issue which came up subsequently is with regard to whether you can create a trust by book entries. I think this is one of the very innovative thinking accepted by the court. Suppose I am a partner in a firm and I have a very ambitious plan to do some philanthropy. I constituted the trust. I did not, then I wrote it, money to be transferred from, money will be transferred from the firm to the this, therefore book entries was made. Book entries were made. Actual movement of funds did not happen. Journal entry was passed, crediting this account on the home. Then in such a circumstances can it be said that it is a valid trust? It was examined by the court. They said, even if you pass book entries, you can still constitute as a valid trust, subject to condition, irretrievable money should be earmarked for this purpose by the firm. That means the firm should identify, keep aside the money. If they do so, then it constitutes as a valid trust. Then comes documentations. Let us go to the documentation now. Trust deed, what it means? Trust deed is an instrument in writing. It is an instrument in writing. In Kamala Town Trust case of the Supreme Court in 217 ITR, they expressed the view. Trust deed means it is an instrument in writing, duly executed, set out the objects and other conditions. This instrument is called trust deed.
So in the previous slide you have mentioned that the non-resident, whether is it barred from 12A or 18A
Who?
registration. In the previous slide you have mentioned that.
Sir, in the previous slide, it was mentioned that whether a non-resident is barred from obtaining 12A and 18G registration.
What do you say?
I don't think so.
See, the bar question is asked, not the answer. That is not the answer, it's a question. Interestingly, non-resident Indians, person of Indian origin, even otherwise, foreign national, no prohibition. As long as they satisfy the test of to constitute as a valid trust. But only for the purposes of Foreign Contribution Regulation Act 2010. If the foreign nationals are in the helm of affairs of the trust, then registration will not be granted. Even prior permission will be rejected with. Unless they satisfy the condition, he should have been in India for more than 10 years, he should have married to an Indian spouse, and all the conditions are there. But another interesting question is, suppose there are 4 trustees, 3 of them are foreigners, foreign national. Can registration be granted? Whether exemption can be provided is another question. Since you raised the right point, I want to deliberate more on that. Suppose there are 4 trustees, 3 of them are foreign nationals, and 1 is an Indian. So this came up, I think it is emanating from the Tamil Nadu High Court. As usual, the Commissioner of Income Tax flatly refused, saying that because of they are all foreign nationals, they are debarred, and majority of the trustees are foreign nationals. They are not domiciled in India. Therefore, registration will not be granted. He is in his own world. He has made dictate on this. Then the matter went up to the court. The court said, whether he is a foreign national or Indian, what makes the difference? He is a person. What is required under the law, he is a person. So now department said, in case we have to issue a notice, in case we have to take a action against the trustees, when he is a foreign national, we cannot proceed with that. Then the court said that's a different matter altogether. For granting the registration, you cannot put all these conditions. And here is an Indian person, he is living in India. You can serve a notice on him on behalf of the trust. Therefore, the court said, even when there are 3 foreign nationals and 1 Indian, you have to grant the registration. So therefore, non-resident Indians, you are entitled to, but you have to consider under the Foreign Contribution Regulation Act, the impact having been foreign nationals or non-resident Indians. Under that act, not under the Income Tax. Income Tax Act, there is no issue at all.
Sir, this trust deed, generally when we register the trust deed with the local SRO office, sub-registrar office, so it is registered under which act, sir? Like whenever we fill up the application in the FCRA, so they ask that this trust is registered under which act? So they have given Indian Trust Act and Income Tax Act, all those things.
For your information, the Indian Trust Act applies only to the private trust, not to the public trust. Many cases I have seen that there is a reference to Indian Trust Act. It's wrong. The moment you say Indian Trust Act means it's a private trust. But you are claiming exemption under the tax laws. Therefore, under the which act you register? At least under in the Tamil Nadu, you have a Tamil Nadu Charity Act. Now it is prevailing. You can invoke that. There are those states where there are no specific enactment. Say for example in Karnataka, I don't have any specific act. Then how do I register? Under which provisions of the act I should register? That means you will register under Karnataka Stamp and Registration Act. Any instrument that you wanted to be registered falls under, because document, trust deed is said to be a document, therefore Registration Act will apply and accordingly it will be registered. Clear? Now we will move to the next one called so contents of the trust deed I have already said. Intention should be there, beneficiary purpose. For the purposes of the Income Tax Act you have to have many more clauses like investment clause, winding up clause, then amendment clause, and this trust deed has to be executed. Now this next is with regard to now this is a simple one, whether the trust deed can be created by book entries I have already explained, and whether a letter written to gift can amount to a creation of trust. Court held yes, it is possible. Whether a partner of firm can create a trust, valid trust, yes, you can. Now the next interesting is to claim an exemption, whether formal deed is necessary. That means you have to have a trust deed in order to claim exemption or a registration under Section 12A of the Income Tax Act. Probably in Tamil Nadu you have abundant temples, came in 13th century and 14th century. Do you have a trust deed? Then how do you claim exemption?
They have some kind of a court order they have, sir.
Suppose when you litigate in the court it comes to. If not, this interesting question came up. In Bangalore, I handled before the tribunal in this matter. The matter was one Sri Vyasaraja, probably you must have heard, those who are in music probably they know, Saint Purandaradasa, Saint Kanakdasa, Saint Vyasaraja, and so many things, contemporaries of 15th century. And this Vyasaraja was the ministerial birth in kingdom of Krishna Deva Raya. And it is the Vyasaraja who gave Diksha to Saint Purandaradasa and Saint Kanakadasa. And in that 1465, so multiple temples were brought in, initiated by Sri Vyasaraja. It has as many as 786 temples in the country, dominated in Karnataka, some part of Andhra, Tamil Nadu you have, and then Kerala, some Maharashtra also, Maharashtra and Pune. So then in 1996, because of the pontiff, there was some mischief, some embezzlement took place. Public petition was filed in the High Court because of the misuse of the funds. In 2011, court ordered to the Karnataka government, you take over the administration of this mutt. Then court has appointed administrator who was the former chief secretary of the government of Karnataka, and they appointed former Chief Justice of India, Mr. Venkatacharya, to look into this matter. They constituted a committee. At least about 4 justices were involved in the committee. So they looked at the records. They did not find any 12A registration with them. They got confused. How are we claiming exemption? Have we filed a return of income? Then suddenly they took initiative. Okay, let's file 12A application. Application was filed. The commissioner asked, give me the trust deed. In 1465, what trust deed you can see? Because of the trust deed was not presented before the Commissioner of Income Tax, he refused to grant a registration, issued a notice to tax them for the last 6 years. Then in the meantime, there were luminaries were there. They all suggested many things. And most of them were of the view, let's have a trust deed, let her make a trust deed. But the senior chartered accountants, senior advocates were all, they said, you have to have a trust deed, without which you will not. Then suddenly sometime back, Mr. Venkatacharya has sent a message to me, and one Mr. Jairaj, IAS officer, is a very well known, honest IAS officer. They called me, will you come over to this, we want to talk to you. I went there. They said, we wanted to constitute a trust. This is Vyasaraja, but we want to constitute a trust. What is your opinion? I flatly refused. I said, you have no power to constitute a trust. You cannot do this. When I said you cannot do that, everybody was very upset. They were just staring at me. I am the senior chief secretary, and what is that you are saying? I said, under the law, you cannot constitute any trust because Vyasaraja's vision, will, 1465 was the ultimate. Then he said, the income tax people is asking for trust deed, what do we do? There is a solution to do that. You have to think. You cannot alter the position of the 1465. Then they said. Then the next day again they called me because I think Chief Justice was something. He said that there is some rationality in his advice. Let's hear him properly, then we'll take call. The next day I went. I said, there is no problem. Because of trust deed you did not produce, And Income Tax Commissioner cannot refuse to or can reject the application. He is wrong. Then what is the solution? Solution is we will take up the matter before the tribunal. We will argue that there is no need for the formal deed of trust. Then they said, why don't you handle it? Because I suggested you handle this. I said, if I have a grace blessings of Sri Vyasaraja, let me have tried. Then the litigation matter came up. I filed an appeal before the tribunal. So there I argue. Formal deed of trust is not necessary in the Indian context. Because by then, 3-4 publications of my book. In fact, in my book, in one of the chapters I dealt, formal deed is not necessary. Because I made a big research into this topic. I went back to the 11th century, how the trust was formed, how the trust was prevailing, all throughout. There was no iota of reference of the deed of trust in the all 11, 12, 13, 14, 15, 16, 17, 18, 19th century. Then how they were granted the registration exemption in the 1922 Act? So then I said, because I have been in existence from 1465, that's a proof. Here are the proofs which speaks that I am in existence and I am doing my religious activity. This proof is enough for the commissioner to understand what are my objects, what are the things that I am doing. This is what is the basic requirement under the law. So 3 sitting arguments took place 3 times because it's a little complex in nature. Then the last discussion, judge asked me, the judicial member asked me, we understand and we really appreciate your argument, but show me under the law in section 12A how I can grant registration without a formal deed of trust. So he hit at the neck. Show me under the law. You are saying well, good, nice to hear. Show me under the law. Then I said, I have no difficulty. I told him, go back to section 12A. In section 12A, they have used the expression created or established. I argued for 45 minutes. What is the meaning of creation? What is the meaning of established? By instrument in writing, if you do something, it is called established. Suppose society is formed. You can't say it is created. It is established. Because you have a memorandum of bylaws and you have a registration certificate. Section 8 company is said to be established, not created. You have memorandum and articles of association and you have an incorporation certificate. Whereas in case of trust, either it may be instrument in writing or may not be without an instrument in writing. In the absence of instrument in writing, it is called created. If it is an instrument in writing, it is called established. Fantastic argument, 45 minutes. Finally, judge said, I agree with you. Granted this registration. So as a result, formal deed of trust is not necessary. Even in the application where you file for registration, they use the expression created. Because this is the Indian law has been recognized, customary practice has been recognized even under the Income Tax Act. So by virtue of these decisions of Sri Vyasaraja Mutt, at least 48,000 temples got the benefit, including Sri Udupi Mutt of Krishna Mutt of the Udupi. Because when Madhvacharya in 10th and 11th century, what do you find trusted?
Sir, in that case, how will they know what is the object of the trust, sir?
That you put it. See, now you have been carrying it out. You put it in writing, that's all. This was my object. This is the committee member. This is my bank account, and you are depositing the money of all these activities. That's a sufficient proof. What more proof that is required? After all, the commissioner has to look at What are my activities? And what are my objects? These are my objects. What are the activities I am doing? Here is a proof. This is more than enough. Okay? So probably when, in fact, even Adi Shankar Bhatt also, the acting auditor came in. He asked me, Suresh, under the new law in 2021 came in, they are asking so many things, what do you do? I said, nothing. You borrow this judgment, just paste it, argue this. So now, law is very clear. Even if there is a temples and other things which has been created without the formal deed, still you are entitled for an exemption under the provisions of the Act.
1023C5 is help in this regard.
Pardon?
1023C5. Whether it
Yeah, definitely. They can enrich out with that. Even for the purpose of notification, gazetting notification by the union government, by the CBDT, you can place this. But the only thing is, to safeguard the interests of the institution, you have to make a declaration. In fact, I did the declaration for last month, and this was produced before the court. These are my objects, this is the things, this is how I do, these are the people, all that. Based on which court said, yes, it's valid. So my friend, here is your question. Now divestiture of property, right? Now divestiture, we spoken about it. That means property should be transferred in favor of the trust. Property means broad term plus both immovable and more property. Assuming agricultural property I have transferred. Suppose I am an author of the trust, I have multiple agricultural properties. Some of the agricultural property I transferred in favor of the trust. Now, the income generated out of this agricultural property, what do you say? Will you say, this is an income derived from the property held under trust? Or will you say, this is an agricultural income? Is a question. The test is, when you do a basic operation on the land, like tilling and seeding and all the harvesting and all that, you sell the proceeds, you get the money. In the normal sense, it's called agricultural activities. And agricultural activities, the income generated is exempt under Section 10. So when the income is exempted under Section 10, can I bring over as an income derived from property held under trust? When income is already excluded, how I can bring it as an income again in Section 11(1) of the Income Tax Act? This was the issue. There are 3 important judgments, and many more judgments came in later based on this judgment. The Allahabad High Court. The Allahabad High Court took the view, look, when the property is divested in favor of the trust, the income generated out of the property is called income derived from property held under trust. Section 11(1)(a) will prevail upon. Whether it is an agricultural income or not, immaterial. It has the character of income derived from property held under trust because it's property held in the trust and income is generated. Therefore, compliance under Section 11 is necessary. Then came Madras High Court.
Whether this will applicable in the lease case?
Pardon?
When the trust taken the land in a lease, under lease.
Yeah, see, suppose a long lease. Long lease becomes a property, no? Register. So then the Madras High Court came. The Madras High Court said, look, when the property is divested, notwithstanding divestiture happens, income is arising out of the basic operation on land called agricultural activities. Thereby, the character of the income cannot be changed just because the property is held in the name of the trust. Therefore, they dissented use of the other codes. They said because of the basic operations, seeding and then the harvesting and all the activities happened, it is called agriculture. It is exempted under section 10. When it is exempted under section 10, you cannot bring it again as an income and then compliances of 75-25% can be done. It is not correct. Because exempted income you cannot bring it to tax it again. Suppose you are not spent 75%, you will be brought to tax. How can exempted income can be brought over to tax? Therefore Madras High Court said, no, it cannot be. Then came the Madhya Pradesh High Court. They have two views before them. Either they have to go to the Allahabad High Court or to the Madras High Court. Silently they followed the Madras High Court, saying that the basic operations of the land, income generated, agricultural income, section 10 prevails upon this, therefore to be exempted. And it cannot be brought over to the computation provisions of the trust when income is exempted under section 10. Now all this has happened. In 2014, law was amended. What was the law amended? When the income derived here, there is a specific code of section prevails. That is called section 11.1. And section 224.2a, the income, the voluntary contribution, then income derived from the property held under trust is mentioned in section 11.1a. Therefore, every income to the trust, irrespective of whether it is exempted under section 10 or not, it should be treated as an income and subject to application of income. This is the law brought in by 2014. The Finance Act came into effect from 2015-16. As a result, even if you have an agricultural income, the code of exemptions you have to follow. Section 11 compliances is a must. Irrespective of the nature, whether it is exempted, any other provisions of the Income Tax Act. Okay. Then we'll move to the next one. Charitable and religious. How many of you say? The point for discussion is this. If you look at the language used in section 11.1a, the income derived from the property held under trust, if it is applied wholly for charitable or religious. They use the word wholly for charitable, then or religious. So therefore, department is always under the presumption. Either you should be charitable or you should be religious. Both cannot be granted. A 12A registration or an exemption cannot be granted. That was always canvassed by the department. Is it correct? Suppose you are a charitable institution. If you apply for 12A, they will grant it. Suppose you are a religious institution. If you apply, you will get 12A. When they come together, what is the problem? See, if it is a charitable, you will get it. If it is a religious, you will get it. When they come together, then what is the problem in granting the registration or providing an exemption? Because the narrow meaning, the narrow interpretation of the department is arising of the word because of charitable or religious. So first time when I addressed the Commissioner of Income Tax in Nagpur, way back in 2006, I brought this to them. Because in the Nagpur it's a training institute of the Central Board of Direct Taxes. So I had a privilege right from 2003 and 4 onwards as a visiting faculty to train the Assistant Commissioner to the Commissioner level. There this question was brought in. Then I looked at it because when both the institutions have a privilege to claim an exemption, when they come together, then what's the problem? Then when I looked at the interpretation, the terms and all that, I found the expression "are" as used in section 11(1)(a), they've used it in a conjunction sense, in the sense either wholly for charitable and oblique or religious it should be read. Why the legislature have not used the word and oblique or? Why they have used the word or? The problem was, if they have used the word and instead of or, then what would have happened? Every trustee should have both charitable and religious. If you have only charitable, they would have rejected. If it is only religious without charitable, would have rejected. Therefore, some sense of mind was provided. They used in the conjunctive sense or. Later on, based on this thinking revolution happened, the first time the Supreme Court judgment came in 2016 in CIT versus Dawudi-Ibrahim case. The Supreme Court said charitable and religious object, they are entitled for an exemption and 12A registration, followed by various other high courts, including the Karnataka High Court held, they are entitled for exemption. Okay. So now we'll come back to the last slide in this, the governing principles. As I said, the trust society, because clients are more smarter today. They are much more smarter. If you ask, if you say trust is better, they say why not society? Why not society? Why not section 8? All this. Now you have to come back to conclusions. In the real sense, how do you advise? What do you consider for an advice? Because your advice is very important. It should be credible. It should be valued. To make it more value additions and credible of the decisions, you have to analyze based on these factors. I have also brought over in my book, there are 12 factors that you have to look into. Once you analyze these 12 factors, then you should advise, yes, either the society or a trust or section 8 company. So with this I will end up the first phase of this formation of trust. If you have any questions, you can ask the questions. I will sit over there and answer. Thank you.
Sir, in the trust deed, the commissioner is insisting on mentioning one clause that the activities of the trust should be within the territory of India only. So if that clause is not there, then they are rejecting it.
The problem is, section 11(1)(a), the income derived from the property held under trust to be applied wholly for charitable or religious purposes in India. Because the language says in India, it does not talk about in abroad. Right? In fact, this was examined thoroughly. In various matters I have taken it up. In fact, I argued before the tribunal. Even if I say abroad, then what's the problem? Because section 11(1) exemption will be given only when I spend the money in India. Even by mistake if I mention abroad, what's the problem there? So then they directed the commissioner, anyway your application is for income to be seen, not by virtue of these languages and all that. But most of them, if you don't want to litigate it, safe, don't use the word abroad. In fact, recently some of them have, they asked my opinion. They have mentioned that so-and-so is permitted to spend money outside India, traveling outside India, abroad and all these things. And they have proposed for changes in the object of the trust. Then I said, what is the object? This is not, spending money outside India is not an object. Object means the object are defined in the deed of trust. Just because the chairman goes outside India and you spend money in abroad, this and all that, it is only application, not an object. Then I told them, better you withdraw this application, otherwise it will be rejected, it will go to the Karnataka High Court. That is.
So in the case of a temple, which is already had by way of a CPDT notification somewhere in 1965, so the exemption was given. The temple was recognized as of a historical importance temple.
Pardon?
The temple was recognized as a historical importance temple. So, but the trustees have already gone for a 12A registration.
Now, you see, it is an option, no. Either in 1023C it can be notified. Our friend said, subclass 5 can be notified. Because of the historical importance, the CBDT can notify to the official gazette of the prime importance of the nation, then they can accept this. Suppose you don't want it, that is again you have a tenure. It is not that all the time it is no limitation of time. Then after some years you have to reapply. So now the option, because in 2014 law was amended. Now the code of exemption, if you are going for 1023C, you continue with that. Or you choose 12A. You can't mix 1 year at 1023C and after 3 years section 12A. Now in the 2021 Act, they have brought it very clearly, 11.7 has been brought it. Either you stick to one of the provision and claim exemption. It is an option, they can exercise.
So in that case, the entire income will be exempted under that 1023 12A in this case of the temple. So whatever donations are
there is no question of complete exemption. Subject to application, they have to spend 85%. 15% they can set aside. 85% they can. If they do not spend 85%, either they have to invoke section 11.2 or pay the taxes. It's as simple as this.
So sir, it has nothing to do with getting that CBDT recognition.
Now what is the use? Even under the 1023 you have to comply. You have to spend money. But only one hour, who is at advantage? Because in one of the forum they asked me, sir, whether 1023 education is better or 12A is better. I said, 12A is better. Why, sir? In 1023, they use the expression solely for educational purposes, not for the purposes of profit. If your income and expenditure shows huge profit, are you satisfied there? In many cases, income tax officer, they have sent the notices because income and expenditure shows more than 36% of profit. What businessman cannot do, you are doing it here. They slap the notice. Of course, he may be right, no doubt about it. Then we have to defend. So therefore, secondly, solely for educational purposes. Solely. If you look at your trust deed, you have multiple things are there. It is not solely. There is a judgment of the New Noble Education Society. They said what is the meaning. See, here also in the New Educational Society. In fact, in my first commentary of the book, I express what is the meaning of solely. I express solely means exclusively. That means if you are an education or hospital, exclusively education that you should have the object. If you have something else, you will not satisfy the test of solely. So I brought my own thinking and concept and research in the book. But many of them were not happy. Why? Because the department follows this book. They said the author said like this, you have other object, therefore we will not grant the exemption. Then most of the friends were saying, why have you brought this? I said, it's my thinking. Nothing. I can't stop my thinking, putting it to writing. Then in 2022, November 19th of October, judgment came, New Noble Education. They have used exactly the same verbatim, what I expressed here. Solely means exclusively. If your trust deed has other objects, then you will not meet this test of solely. So therefore, now if you are claiming 1023, if you do not satisfy, you will be rejected. You lose the exemption. Whereas 12A is a broad sense. No. These restrictions are not there.
Sir, but in this case, sir, I couldn't understand what is the benefit of getting this notification.
But that's now only benefit is, today if you ask me, ultimately only one benefit. Through notification under section 80G2. 85 notified temples, notified all those things. Board of Trustees has power when they receive the money, to what extent to be treated as corpus, what extent to be treated as voluntary contribution general. In normal circumstances, Board of Trustees have no power. Only the donor should say, yes, this is towards the corpus. That is the only advantage, nothing else. Second advantage, 1023C. Now in case of section 11, if you do not spend 85%, you have to file form number 10 for accumulation of income. There they have used the accumulation, but they have not prescribed form. In fact, I brought to the notice of the Union Finance Minister that time, saying that level playing has been brought to the extent of 95%. I have been vehemently brought this long years. There should be level playing between section 12A and section 2023. You can't distinguish. Because they are charitable and I am charitable. Why they are called as the privileged people? Finally in 2022 level playing has been brought in. But still, accumulation, there is a difference. Here if you do not file form 10, you lose exemption. You will be part of tax. Whereas in case of 1023C, though they say it is accumulated, they are not prescribed time under which you have to file form number 10. That is the only advantage today.
Thank you, sir.
Okay, we will move to the next one. Next is very simple, making an application. See, now the new rules has coming from 2021. The registration provisions have been revamped. Old laws were substituted and the new provisions has been brought in. Okay? Now, requirement of registration quickly. You have different codes. This is very important. I think you should be very much familiar. Under which provision you have to make an application. If you err, your application will be rejected. If there is a mistake, it will be rejected. Say now 12A AC1, when the law was brought in, those existing trusted institutions prior to 2021, which they have claimed an exemption, they have to make an application under this clause 12AC1. So they have also prescribed the timing in which they have to make an application. Okay? I think this will be circulated to all of them. Slides? I'm not sure. Okay.
Slides.
Then 12AC2, they say trust institution registered under section 12AB for renewal and a period of said registration due to expire. That means existing institutions, you applied on 12A1, 5 years is getting over. 6 months prior to the expiry, you have to make any applications. This is covered. 12AC3, trusted institution provisional register under 12AB. That means the moment you constitute the trust, you go for registration, they will give you provisional registration. And the maximum tenure of provisional registration is 3 years. Then that time, you have to file under this. Then you have 12AC4. Trust institution has become inoperative due to the first provision to section 11.7. That means you have 1023C and you have section 12A also. Because you have been following section 1023C, you are not gone into 12A. Then it becomes inoperative. Suppose it becomes inoperative, still you have an option to file an application, decide whether you go for 12A or 1023C, which is the one. Then 5. Trust institutions have undertaken modification of objects. This is very important. I will talk about what is modification of objects. Okay? For the time being, if there is any change in the objects, you have to make up on this. Then you have 6 any other cases. That means not fitting into what we discussed. Then comes under the any other cases. So in fact, in my book, I prepared the tabular form only for the members to understand quickly what are the action points to be taken in this regard. Now this is the application that you will file. Now new rule says you have to file form 10A and 10B and all that. Now form 10A, when you have to apply? Form 10A applies when AC1, existing trust and institutions, when you are filing the application, that applies. Then 6, that means in any other cases, not as a provisional, not as a modification, all that, you have to apply 10A. 10AB applies in all of the rest of the cases. Clear? Then I will come to the real point. Documents, if you go to the rule 17A2, you have a lot of documents to that. You go through that rule 17A2. List of documents that you have to furnish is there. And also time and again they are changing in the form also, and new insertions are being made in the software. Look at that. Then, now we will come back to very important one. See, note on activities is very important. In fact, yesterday I had a case. It is a climate change client. In a small way they started. On the board of Section 8 company, the directors are very eminent National Law School study toppers. They are all advocates. And one of them took a very interesting study on the climate change. Therefore, he constituted Section 8 company. 22-23, they spent about 3 lakhs. then 22-23 assessment year, 23-24 assessment year, they spent about 6 lakhs. Expenses was about 70, 85, 90% they spent. And there was a remuneration to the directors. Commissioner asked me, out of 3.5 lakhs spending 8 years, you have paid 50% to the director of income, director of alone. Then how do you say this is a charity? How do you say it is for the activities of the trust? Then I told her, after all, he is an eminent person who is doing a research in climate change, and there is no bar under the law to pay salaries. Okay. Then 2024, what the accountant did was, the director gave as a loan in the earlier years. He gave 10 lakh. Then in 2023, 4 March, he said, I don't want loan, convert it to voluntary contribution. They converted it to voluntary contribution. As a result, it becomes a big income, 12 lakhs, and spending was only 2 lakhs. Because 2 lakh actually they received the money, they spent it. But 10 lakhs by virtue of an entry, there was no money movement, but they spent. That, out of 12 lakhs they spent 1,80,000, then what kind of activity? Then I told her, what is the meaning of activity? You must define what is activity. You mean to say I have to spend every money? There is a law. Either I have to spend or I can accumulate. You can't stop me. Not that you should, isolation, you should see only 1 year. Just because 1 year maybe for some reasons or something, they may not able to carry the activity. It doesn't mean my intent to shut down. You can't presume that I intend to shut down this. You can't do like this. You have to take it in the right spirit of the law. If I have got 12 lakhs money, I have not spent, means I would have filed 11-2. You check that. If I have done it, I am done away with the law. Here is a proof. Activity 1, 2, 3, 4. With a great resentment. But I was very doubtful I would get this 12-year registration and ATG, 12AB granted. I lost my hope. When I came here this morning, I saw the mail approved and granted. So now we have to define what is activity. Of course, I would have taken up in the tribunal. This is a different matter. So now the brief activities, when you file, see next year you will have a very tough time, I am telling you. Most of you professionals should be geared up with manpower and ability, skilled one. Because those who are applied in 2021, you have to apply on or before 30th September 2025. Another interesting question came. Looks to be silly, but very important. In fact, department also asked me. Most of this, the registration 10AC and all that, or 10AD, they give effect to the assessment year. That means this will hold good for the assessment year 26-27. When you file it in 22-23, it goes to 26-27. So when the 6 months expires, next question, because you have to file a renewal application 6 months before, what is the date that you have to file? Then most of you will think and tell me something about that. So about 26-27 assessment year, your 10-year registration holds good. 10 AD that you are given approval holds good for the assessment year 26-27. And you have to apply for the renewal. When?
6 months before.
6 months before means when? Is it 26 March 26, 6 months before?
March 26, 6 months before.
Is it 6 months before the March 26?
Yes, sir.
26-27 assessment year.
Yes, sir.
So when 26-27 assessment 6 months means prior to 30th of September 2026?
25.
Why? Why? 26-27 assessment year when I have, that my assessment year expires on the 31st of March 2027. If I reckon 6 months, it will become 30th September. See, looks to be simple, but how much confusing. See? Why?
Assessment year
Do we have
26,
to go by the
27.
assessment year or the financial year?
That's exactly I'm asking, you must answer me.
You have to go with the previous.
See, there the mistake in this 10AD, they are not referring to the previous year. That's the confusion. I suggested them, you should not confuse the public at large. Tell them this is the, even they have got a doubt, which assessment? I said, you have to take only the previous year. Because application relating to the previous year followed by the assessment year. When 26-27 assessment year, it means 25 and 26 previous year. 6 months to be reckoned from the expiry of the accounting year. That means on or before 30th September, you have to file. Those who are filed in 2021, huge application has to be filed. And the way they are asking informations and all, now again they have gone back to the old methods. Though you make an application in digitally, but process is done manually. Already started. So therefore you have to keep the heap of papers, file, thronging on the doors, gone back to the old era, now again. So therefore that...
I think we can do, if date is 39/25. We can even do it even before that, sir.
You can. So it's safe to do much earlier.
Much earlier.
Then the process begins after that, and lot more work to be done. Because recently I'm appearing cases and all, they are asking. In fact, they looked at the website. In one case he said, sir, website is not working, but I saw the expenditure, website expenditure and the income expenditure. Where have they spent the money? I said, which website? Then I got confused. I called my other colleague chartered. Hey, what happened to this? They said, no, they migrated to a new website, sir. That's the reason they could not find. Then I told him, you look this. Then he said, oh, it's there working. So that means they are screening every aspect. Now most of the time, 12AB will be at the disposal of the jurisdiction item, or he has to give an independent report before the commissioner. Based on his report, if there is a positive, good recommendation, then registration will be renewed. If it is a negative report, it will be rejected because there is an evidence of this negative report. Should be careful. So that means it requires enormous manpower. Secondly, you have to get all the documents together, right? And that too, it is in the period of tax audits and other audits. Whether you will pay attention to this or to that. So therefore, mentally make up how to deal with this situation. In fact, I told our colleagues, all of them, they should be careful. It's not that easy. I told them. So therefore, education and training process will begin from January to tell them how to tackle this, how to do this, how to do. Divide the work to the various people. Simply only one person, only for filing doesn't happen now. Anyway, this is just a suggestion to go ahead with that. Now once this note and activities is a must. This is all very simple, nothing to be worried. Then this is also procedure subsequent. Once you make the application, then the procedure comes. I will come back to this. Very important. So what it requires? Now 12AB has been brought in. On section 12AB you have 5 subsections. 12AB1, 12AB2, 12AB3, 12AB4, 12AB5. 12AB1 to 12AB3 deals with procedure of registration. 12AB4 and 12AB5 deals with cancellation of registration. Okay? Now, this 12AB 1, 2, 3, look at it. What are the requirements that you have to comply? So once you file an application, then Commissioner of Income Tax will sit at the verifying your application and the documents that you have filed. He has a power to make an inquiry. And the power has been enlarged. Earlier the power was restricted to whether my objects are charitable objects, whether I have carried out genuine activities, what the powers with the Commissioner for disposing the application. Now, 2019 Act, 2020-21 Act has enlarged the scope of the Commissioner's power. Now, in addition to genuineness of the activities, the second requirement, complaints of such a requirement of any other law enforced by the trust or institution which are material for the purpose of achieving the object. Any other law for the time being enforced. What are those laws? Nobody knows. It's so pathetic. Once, out of context of discussion, one of the commissioners said, even violation of the vehicle under the Transport Act could be brought over here. I said, what shameful is this? How can you think? There are as many as 750 acts in India, to the best of knowledge, we don't know. Under which law you are violating? So many forums they have asked me particular questions of how do we do with that? Even for my commentary book, I have resolved saying, those are the laws for which either our trust or institutions are required to be complied with. In achieving the objects, suppose you are earning the professional tax, it will not come in the way. Suppose you are the Provident Fund Act, that will not come in the way. Then which are the acts that will come? Suppose you are having a specific enactment called Trust, for example, Tamil Nadu Charity Act, you have to comply the requirement of the law. Secondly, you have a Societies Act, you have to comply the law. Companies Act. Therefore, these laws and then Foreign Contribution Regulation Act, you have to comply the law. If these are the acts which goes to for achieving the objects of the trust. If there are violations and the regulators have finally come to the conclusion they have cancelled your registration under those acts, where you have not challenged in the court or you have challenged but you have lost the court, then in such a circumstances, Commissioner can refuse to grant the registration or cancel the registration. You know how this expression came in? It so happened in 2007. In 2007, there was a trust run by the women entrepreneurs, very classic trust. There what had happened, they received $1,000 by way of foreign contribution. Some of the foreign nationals came and he was very happy with them. They gave $1,000 to them. They received this foreign dollars and credited to the bank account. And it was shown in the income and expenditure as foreign contribution. Then they filed an application for registration. While disposing the case, Commissioner Carlson personally, you have received a foreign contribution. Do you have a FCRA registration? They said, we don't have any FCRAs. Then how did you receive that? There's a violation. Because of this violation, either you withdraw the application or I will reject it. Then they approached me, sir, this is the position, please help us to do. Then I went to the commissioner, asked him, sir, this is a violation under the foreign contribution regulation. Why are you worrying about it? You have to go under the Income Tax Act, right? Commissioner is of the Income Tax, not the Ministry of Home Affairs. You have to look at what are my activities, whether I have carried the genuine activity. You confine to these things. Why are you stepping to the other regulations? It's not permitted under the law. Now I will write, you write it, no problem. But you cannot take that as a condition for me to either granting the registration. This is not correct in law. Then he said he rejected. Matter was went up to the tribunal. In tribunal I said, if the intention of the legislature were to consider other laws further, then they would have put a word saying that complaints of any other law for the time being enforced, because that language has not been brought in section 12A, therefore that cannot be a condition for the granting the registration. Then tribunal accepted, yes, well, he cannot scoop into this. He should say only genuine activities and the objects of the trust. They passed the order in our favor. Then in 2019, because that was not challenged in the court, that they brought it as a change, saying that because we have used the word and not mentioned for any other law for the time being in force, now they say if you do not comply any other law for the time being in force, achieve the object, then they can refuse to grant the registration. Then genuine activities, of course, you have to prove. See, now as like the activities nowadays, the commissioners are giving top importance to that. You have to create a credible documents, specific. And most of the financial statements what I have gone through, it does not look like a charitable institution, financial statement. It is just like a common financial statement. It does not distinguish it as a business or a charity. See, you have to bring up the financial statement in such a way that you have to speak that these are the project, these are the object, what you are doing. In most of the balance sheet, if you look at it, just like any business, same thing follows. Now, tax department, when they look at it, they can't make out. What the charity are you doing? Because of the flaw in presentation, causes damages on that. Therefore, alertness is required to frame that financial statement is brought in. In most of the cases, what we do, all the expenditures what they have done should be linked to the object. Project should be ultimately go to the object. Object what contained in the deed of trust, you have to bifurcate it. So, in future, this is very critical. Therefore, friends, please pay attention to these matters. So, what I am saying now is based on the practice. Then, of course, the disposal of the applications, I brought it here. This is all very simple, nothing more complication. Now, rejecting the application. Now, modification of object, I will take it. Whether objects can be amended. Straight away I am putting this question to all.
Yes, sir.
Suppose author of the trust brings out various objects. Can a board of trustees change the entire objects as they want? See, my wishes, suppose I am author of the trust, I brought out, this is my wishes. When the author of the trust is dead and gone, can subsequently they can change the entire thing? Then what is the wish of the author of the trust? In fact, most of the time in the past, whenever there is a change in the objects department, and we will also make a clause in the deed of trust, any amendment, prior permission from the Commissioner of Income Tax will be sought. Right? Because of this clause, when you go to the Commissioner, sir, there is a change in the object, flatly he will refuse. Then what is the option for you? Assuming that there are settlers also gone, dead and gone. What do you do? It's a big challenge. In fact, we face this problem. In one time it so happened. When they changed the subjects because of this clause, I presented this. Headquarters said, no sir, changed subjects are not allowed by CIT. Why? We don't know, sir. The objects will be allowed. Why means they have brought to me, show me in one of the author of the trust, author of the book. He has made a question whether the object can be changed. He answered it, no. They said, sir, here is it. I said, what nonsense is this? When the constitution itself can be changed, why not my objects? Then I started making a research into the topic, whether objects can be changed. Finally, I surfaced, if there is a power vested in the deed of trust for making changes in the object, you can change the objects. Secondly, for changes which are the objects can be changed should be delimited in the deed of trust. If these things are contained in the deed of trust, then board of trustees can make an amendment. Now the next question was, should we take permission from the Commissioner of Income Tax? Why should I take the Commissioner's permission? After all, who is he to do permission? I am the trustee. I am the settler. I have a board of trustees. Why should we go to the department for this? This question came. Interestingly, question came in the Delhi High Court in Shakti Charities case. Then the Delhi High Court said, Commissioner is not a party to the trustee, therefore you need not go to the Commissioner at all. As long as you have the power to change, then you can change. Then Kamala Town Trust case, Supreme Court came, 217 ITR, very important judgment. There they said, since the Commissioner's department is not party to the trustee, it's a board, it is well within the powers of the board of trustees to change, they can amend the objects of the trust subject to conditions in the deed of trust. They need not knock the door of the department. This is the judgment of the Supreme Court. Now what happens? When you sought the permission of 12A, you filed your trustee which contains the objects. Subsequently, when you make an amendment, if you don't bring it to him, he will not know what objects that you have. How the income tax officer know when you make an application, your application of income should be objects of the trust. Silently, if you change the object, by virtue of the judgment of the Supreme Court, if it is not within the cognizance of the income tax department, how will they allow as an application? Big vacuum came in. 2012 I wrote to the CBDT, there is a vacuum. Because Supreme Court judgment says, Delhi High Court says, most of the High Court says, don't go to department. And if I do that, department will not know what for, because there is a conflict. Because ABO says, no, it is not the object, because you have not brought to our notice, then how do I grant this? So litigation started. Then I wrote to the CBDT saying that something needs to be clarified in this matter. So after 4 or 5 years of this issue which has been brought up, in 2017 law was amended. 2016 which was amended, came into force from 2018-19, that whenever there is a modification, you need not go to the Commissioner of Income Tax. You change it, but you have to re-seek registration afresh. That means you have already got 12-year registration. If you change the object, you have to reapply for that. Now there is a 12AC. There is a specific requirement whenever there is a modification, that is 12AC 5. Any modification of object, you have to file an application within 30 days. If you do not file within 30 days, then you will lose exemption, because condonation has been stripped off in this regard. So therefore, whenever there is changes in object, so many people have come back saying, sir, there are changes in the trustees, should we amend this? Should we seek the permission? Change in the office from one place to other place, should we amend? Should we take again first registration? Answer is no, you need not. Only objects as defined in the trustee, if there is a modification of those things, rest of them falling under the purview of administrative matters. These administrative matters need not be, you need not seek first registration. For example, trustees, resignation of trustees, death of trustees, you need not change the constitution. Only you can pass a resolution. Board of Trustees can pass a resolution, give effect to that. This is how to be done. Okay? Registration, 12 you have to do that.
So for the FCRA, we need to intimate about when there
FCRA is different, don't mix it up. In FCRA, you have to file. Any change in the functionaries, any change in the Board of Trustees, 6E form to be filed within 45 days. You have to seek prior approval. Suppose the trustee is resigned, only after the FCRA department gives clearance, he is discharged. That's why in future, because of the complexity of the law, you have to advertise. We wanted trustees, position called trustees. Because voluntarily most of them are not coming. Because of the complexity and the punishment. So then there is a specified violations. I think most of you are aware of the specified violation. Specified violations, because 12A registration also can be cancelled. Section 12AB.4, 12AB.5 deals with that. If there is a occurrence of the specified violation, then specified occurrence of specified violations, or in the course of the assessment, if the AO comes to conclusion that proviso to section 215 applies, reading with section 13.8 and 13.10, he can bring it to the notice of the commissioner, and commissioner will look at it, based on which he will cancel the registration. And the third circumstance is strategic management. Even till today I don't know what is the strategic management circumstances, because CBDT will notify these are the strategic management for which registration can be cancelled. Now specified violation is very important. If there is a violation, then your registration can be cancelled. What are those violations? One is, this is being brought in explanation 4 to section 12AB, where any income derived from property held under trust wholly for charity has been applied other than for the objects. That's why you should be very careful. What are the objects of your client? You must know. Where are the expenditure incurred for the objects? You must prove. Even in the 10B audit report also you have this. So then how do you say this expenditure? Will you see all the vouchers and bills? How do you discharge your responsibilities? This is very important. So therefore, firstly that you have to categorize the expenses into different objects, different projects, different objects, then you have to come to the conclusion. And you must define why you treated this as an object. To give you a live example, one of the big fours, where I am the consultant for this it's a foreign trust. Huge funds are being deployed every year, around 400 crores every year this bank. And 1 year, in March 23, they spent, because union government said, they develop artificial intelligence in charity on different areas, health sector, education sector and all that. On the health sector, they hired a very big institution for consultant, creating a platform for health and all that. A lot of money was spent. Finally that was watered down, could not able to take. The big fours, they are the one side they are the auditors, FCRA, I take care of that as a consultant also. Then there is the point, this is not for the objects of the trust. There is. Finally management said, let our other auditor, he will answer this, that's all. Then I looked at it. Then there was meeting took place. I placed before them, how do you say this is not for my object? Artificial intelligence is a very broad term. In its spheres it covers everything. When I have an object to carry on the health sector, because artificial intelligence is a broad term that can move into the different sectors, like educational sector, like medical sector and all that. When they carry out the research and the test on the particular aspect by virtue of this artificial intelligence, if it could not achieve, it doesn't mean that I have not spent money for the object. When I have an object in the trust deed as for artificial intelligence, that would suffice. Whether it is a success or not is not material to be looked into. Finally, after all this debate, they said, yes, we agree with you. Because earlier they brought it not for the objects of the trust. I said, if I say it's not for the object of the trust, it comes under specified violation. If I have a specified violation, I lose exemption. For 400 crores, for 1.25 crores, how do you say it is not for the objects? After all this debate, they said, yes, allowed. So now you should be careful. Then income from profits and gains of business which is not incidental. That means incidental business covered under section 11.4a, you are allowed exemption. If it is other than 11.4a, if you carry the business, either charitable or religious institutions, covered under specified violation. Then the next is for a specific private religious purposes, if you use the money, it is a specified violation. Then Dr.N.Suresh established or created, commenced the act has applied any part of the income for the benefit of any particular religious committee, because our earlier section 13.2b has been brought over there. Then any activity not genuine are not carried in accordance with the conditions of subject to which trust was registered. This is very important. If you look at the registration, approval, Commissioner would have mentioned 20 classes. If you violate any of those classes, it is catched here under 12AB.OF. It so happened, one of the clause subject to which approval was given was, in case of any sale of immovable property, prior permission from the Commissioner should be obtained. You please look at your approval also. At that time, in 2021-22, this clause was inserted by the Commissioner. Then we took an exception because immovable property he cannot entangle with these conditions. It is the prerogative of the Board of Trustees to decide what they have to do and what are the powers given in the trust deed under which Board of Trustees can do that. Just because of the sale, we can, under which law that you are enforcing? Are there any restriction under the income tax law that trust property cannot be sold? Then after this hue and cry in 2023, CBDT issued a circular, this clause should be revoked. So, then in case of specified violation, there is a specific formula. This is the most advantageous formula that they have brought in. Because at one point of time, any violation, they used to tax on the gross income. Because charitable institutions is a privilege under which either you have to comply or you have to pay tax on the gross income. And we have raised, and there was the first judgment of the Bombay High Court in Mafatlal trust case in 2006. They said any violation you have to tax only the tax on such violation. You cannot tax on the entire income when they have carried out charitable activities. So like this Karnataka High Court judgment came and all that. Finally now they say they have brought the formula. In case there is a violation, you have to compute the income, taking what is the income shown in the income expenditure. Then the expenditure, if it is not from the, if it is from the corpus, then to be added. Then loan borrowing if you apply, to be added. Then depreciation, which is already claimed, to be added. Then expenditure not in the form of any contribution or donation. That means you cannot give as a donation, claimed as an expense. Subject to this, you pay taxes and be happy. So friends, these are the things. I think I will give some time for you people to raise the questions. If you have any questions, you come back. Hope that you have all digested this formation, the procedures, the dull subject, I can tell you. I tried my best to make it more live and convincing to all of you. If you have any questions, please revert back to me. Thank you all. Thank you again.
Sir, whether the trust should apply for a professional tax registration also? Whether the trust should apply for professional tax registration?
Why not? Is it not an establishment? Not an establishment? Then what do you say?
Well, I think somewhere they mentioned it should be in the nature of trade, commerce.
Never.
Shop
Shop's an establishment. They said the establishment, not as a trade, business, commerce. No? Have you established? Yes.
So in the case of a temple which is created somewhere in 1965.
See, only thing is people are living, people are working. You have to take in the holistic view, giving an interpretation. Just because people who are working in temple doesn't mean that they should not get the privilege of other benefits of the law. If that's the case, what about the PF? What happens? They work for 50 years, get nothing? Let's contribute to them.
Sir, in some trust case they say that we are just paying honorarium and they are all volunteers. So do we...
See, volunteer concept is different. The employee concept is different. In one of the institutions, they get 1,600 crores revenue. Let me not name them. I'm an advisor to them. But top management, top people, they have IIMs, IIT people, triple professional qualification like CA, ACS and ICWA, all top. So, they're running very efficient. And also sometimes they come with the questions. It's very surprising the way they're penetrating into provinces. The question they ask, very appreciable. They have 3,600 volunteers. To get momentum of so much of volunteers is not that easy. We are struggling for even 20 volunteers to do. Right? How did they do? Because common understanding. And the professionals who have asked them, hey, how much are you getting salary? Sir, only 25,000 I take, sir. 3 professional achievement he has got. Why did you do? No, Lord gives me, that's enough for me. That's the spiritual. No. He is not quantifying in terms of money. He is quantifying in terms of the happiness he is getting. He said, that's the... So therefore, let our contributions, if there is an establishment, let the larger section get the benefit of that. People who are working, who are contributing to that. Don't you think so? Why should we take the narrow meaning? Stripping off all benefit to the people who are working. Correct? Yeah. Then.
If 12AB is not filed on time, what is to be done, sir?
12AB application not filed.
Yes, not filed on time. Renewal.
See, now what happens is, 2 things I did not share, but I will tell you. Sorry, I will make it a very silent this thing. In 2023, May 11th, CBDT member came. So when the CBDT member came, I had a privilege at the instance of the principal CID to meet and discuss various things. He said, your authority, please talk to them. Put what are the problems that is facing. I brought 9 issues before them. And one of the issue was delay in making an application. Because in one of the example I gave them, there are temples. The value of those temple properties, 1 lakh crore. Just because I am not 512AB, should you punish me in taxing all this? What is the justification? Management is there, they are depending upon the professionals. If they do not comply with it, how do you do that? It create a big mess in the country. Then she asked me, what is the solution that you give? I said, you give discretion to the Commissioner of Income Tax. Case to case, let him hear. Why I have not filed, I will explain to him. But you cannot take ad hoc decisions to cancel the registration and tax me. Don't do that. Give the power to the, because power of the Commissioner Conduct has been stripped off from 2007. I said, give them this power. Now, of course, very seriously, other matters they voted. They issued a circular on 24th of May. That time has been extended. That means those on or before 31st March has been extended to 30th September. But I was not very happy that time. Then in this budget 2024, law was amended. Power has been given to the Commissioner to control the delay. This is by virtue of the expressions that we have made. Now that the power is there, suppose there is a delay, seek a condonation, bring out why that you could not make an application, justify that. But you must have a reason for that.
So if the CIT rejects any order, then you have to go before the tribunal only.
Because now on the CIT order on the registration, granting of registration, you have to move an application by filing form number 36 before the Honorable Tribunal within 60 days from the date of the order. And you have to make out ground of statement of facts, ground of appeal, you have to pay the fees on which you can challenge it. Say for example, in few cases, because of the code number, you said no, 12AC 1, 2, 3, and many of them did a mistake. Just because they did a mistake, application was rejected. Then they brought to me, sir, this has happened like this, what to do? Then I met the Commissioner. Sir, this is happening, this is very unfair. Just because of the mistakes, smaller mistake. It is a curable mistake. It's a human. Error is happening. But you can't just cut up the bud itself. It's unfair. Then he said, Dr.Suresh, I don't have power to change the application form. It's all digitized. How do I change it? Sir, but this is unfair. Now law has been amended. It is a curable defect. It can be done. Yes, sir, you have some questions to me.
Regarding 1023G5, whether there is a 1023G5 and 80G2B, where the 80G2B, they are telling about the historical and other things, archaeological.
Notified.
Other than that, any temple can go for 1023C.
See, that you have to, any fund or institutions will say, they can.
They can.
Historical importance if you have.
That is for 80G.
Yeah, even 80G2 also. 80G, see, while giving a notification, you are making an application, they will make a thorough test. How you say there's a historical importance? How you say that this is falling under that? Notified temples. So you have, suppose we have ancient temples, ancient institutions that we have. They are all coming under the purview of this. You can. But the only thing is now, for all practical purposes, 12A seems to be the most adorable. 12AB is the most, because very few restrictions are here.
So as you said, that Vyasara Mutt is thousands of years.
Pardon? Pardon? Yes.
Everything is.
That will come for the next 100 years, these decisions. Take it from me. It is such a, because even judgment, you read the report. It is reported in Taxman and other this thing. The judge has borrowed verbatim of my argument. Every word he has brought it. And after that what happened? He said, I want to see this temple. He asked me, please. And I told the chief administrator, sir, make arrangement, judge is coming. Then he came. Then Swamiji was there. That time administrator had been shifted to Swamiji. Swamiji said, we thank you for all this. You know what the judge said? Don't thank me. Here is a gentleman. He showed my face. You thank him. Because of his research, I could be able to do something. If he has not done it, even I am very, very helpless. That's his broad mind. So it's a wonderful judgment. Because only 2 words, created and established, 45 minutes resulted in this. That's why, friends, you must also pay attention in reading. Apply your mind. You can do much more. You're all intelligent, but how to use this tool at the given time? That's all. It will help.
So this ATG 2B, do we have to apply separately for getting the ATG donation?
Yeah, of course, there is a process, no? There is a process and application. It will go to CBDT. CBDT will revalidate. Application moved to Commissioner of Income Tax. Their report will go to CBDT. CBDT then they will evaluate.
Sir, if a trust is incorporated before 2 years, is there any resort that they can apply for 12A registration now?
Yeah, do they have income or no income?
They have income. The commencement of activities have already happened. But as per Income Tax Act provisions, within 6 months of commencement of activity.
No, even if you have not applied, you can apply. But you will not get exemption for earlier years.
But if there is no code in portal for application of such.
No, provisional, any other case is there, no? Come back to 6.
Okay.
Anyway, 6 also it will be either commenced or not commenced. You have 2 categories. That was brought in by the 2024 Finance Act. Commenced and not commenced. Commenced, income excluded, income included. See, first of all, why so much complication was required? When I did not understand, I told out of turn to the commissioner, why all these procedures are required? Once in 5 years they brought it, because under the FCRA there is a provision, they brought it. That's all right. Once in 5 years. Why provisional? Provisional. Then again within 6 months you have to apply. You have gone increasing the paperwork. So trustees should appoint only for process and compliances. Ultimately, what do you achieve out of this? Tell me. 0.
New tax also they are going to.
Yeah. New tax law. God knows how it will be. I am eager to look to that.
So they have to start from provisional registration now, even though 2 years have.
Definitely. You don't worry about just apply. You will get it.
First we have to.
Because first registration you will get seamlessly. Because that goes to the directed general system. Generates. Only next when you make application, marathon things will start.
Thank you.
Sir, if the regular order gets rejected, whether the provisional registration initially they are giving for 3 years. So in the meantime, if the regular order, the final order, they are rejecting it.
What do you mean by final order?
That is the permanent order.
Permanent registration.
Where? Under FCR or here?
In the regular income tax registration.
Ah.
So, for example, sir, up to 2025-26, the provisional registration is valid. Now in 2024 itself, the commissioner has rejected the 12AB order. So does that mean that, because provisional registration is valid up to the next year, 24-25.
That's all. Subsequently you lose exemption. Your income is being brought to tax.
What about the past years?
Past year will continue. See, because it will have a prospective effect, not retrospective effect. Any cancellation have a retrospective effect. No retrospective effect, prospective. But as I told you, have a judgment. But now the law was amended. In case of the violations, then the year in which the violation happens, all those years is covered for cancellation. Suppose there is a violation for last 5 years. If the income tax on the search or survey they found that there is a violation for last 5 years, cancellation will have retrospective effect of 6 years. Otherwise, it is only prospective.
Sir, continuing to his question, the society was incorporated 2 years back, but they have commenced the activity only during the current financial year, and then they have applied for the 12A registration. Provisional registration is also done. In this permanent registration, will there be any issue because that they have not commenced activity for 2 years?
Yeah, see, only thing is those activities which you have commenced, then you have to apply afresh in 6 months' time, no?
They have done the...
So you have already started the activity.
Yes, we have started the activity and the application is also filed. Is there any grounds that they can reject the application because that you have started the commenced the activity only after 2 years or?
No, absolutely not. Only you have to comply with the requirement of the law. Even many cases 6 months they have not applied. What do you do? In some cases they have applied, there was a confusion. Because they have to cancel the earlier registration, then they have to restore this. Still confusions are there, but nothing happens.
In practice, this restoration of temple, mosque and that 2B notification, is it difficult to get? Because someone wants to apply for a 200-year-old church restoration. So they're wondering whether it is too complicated, whether it is possible.
To get a registration you are talking?
No, for the 80G 2B notification.
Only thing is 80G, to get that, you have to have a strong case. You have to prove. You must have all the documentary evidences. With that, it is possible.
So it's a question of subjectively convincing.
Yes, evidences. Evidence is very important. With that you can definitely succeed.
Sir, minimum number of persons in this trust, how many members?
I can't hear you, please.
Minimum number of persons in
Yes.
In the trust, how many members should be there, sir? Trust.
Normally it is based on the clauses you mentioned in the deed of trust. Normally you say it may be from 2 to 7, 2 to 9, or you may have any number also. There are no restrictions. Only deed of trust will talk about that.
Okay, one more question I have, sir. Like we are getting the passport immediately.
Will you keep the mic close to you, ma'am?
Yeah, the 12A, I'm going to form a new trust. So I have to, some urgency is there to get the 12A registration and 80G. So is it possible to get the registration in expressway or something if we request the commissioner or is it possible, sir?
So that means just like satellite has to happen.
Not like that. Before March, sir, so that I can.
See, now by and large, because first registration happens only by the principal systems. Directly it happens. Human intervention is not there. Right? Even commissioners can't do anything. It directly goes to the systems, revalidated, back end, done it. But now by and large between 30 to 45 days it's happening.
Okay.
And seamlessly it happens.
No, I want that 80G registration also.
It is
then only I can claim the donation.
Yeah, why not? Why not? It is a simultaneous thing.
Okay.
If you make applications, this thing, simultaneously, separate applications, you will get that. But now most of the times, renewal time, I source for the department, why we should give 80G? They think they are doing a fantastic favor, giving 80G. Why we should give 80G?
No, actually there is in this case what I am going to form now, it's actually a big case, that's why I am asking.
No, you can. The first initial registration, you will not face any problem at all.
Thank you so much. Actually,
next 3 years you can have a peaceful time.
Thank you so much. Actually, it's a very good session, sir.
Thank you.
Actually, totally different, sir. You have a book, I think, you can recommend.
This is a very nice book. It's a entire All India level tax department follows this.
Okay.
And even most of the principal commissioners have that. Then this one, it is called Practical Approach to Taxation Accounting of Charitable Trust NGOs. 2024 edition was released about 2 months ago. Yeah, it has
photo of that. So
exhaustive coverage of CBDT circulars and Supreme Court and High Court judgments. And I brought it in a very simple, even department find it, this is very useful to them. Because whole attempt that I made in this writing of the book is, because I am also in the theory and practice, not theoretical. Because I do attend for the scrutiny cases, I do attend for the CIT appeals, I do attend for the tribunal cases. What's happening, and being also faculty for the various institutions and NADT and all, what is happening, what is the mind works, I capture. So as a result, I brought all those things. I given more than 1,100 lectures so far. At each lecture, as our friend is raising questions, at least 50 questions they raise. So 50 questions is educating to me, right? I brought this. That's why next book you will find interesting issues on child matter, 4,000 questions. I'm in a dilemma. Should this Lord Saraswati prevail on me? Should I go for a publication or should I go for a large section of the society with a small fees, 499 rupees? I don't want to enrich, making profits out of that. Nor I want publisher to make profit out of that. I want this to go to the every remote people who have an internet to download. 4,000, if you ask questions, you will get an answer. 2 lines, 3 lines answer. It's very easy. Tips. So now should I go for ChatGPT or this? Our technical people still sitting on that. Only for maintenance we are charging 499 for 4,000 questions. Plus interrelated articles, because I read a lot of articles in taxman and tax references and all that. That will also be covered. Hope that it may be useful to the large section society. Hope my talk today was useful to all of you. I presume so.
thank you, sir.
Thank you all again. Huh? You can take one just photo, it will be helpful. Practical approach to taxation accounting of charitable trust, NGOs and NPOs. Take one photo, just like that. So I thank you all.
Thank you, sir. Sir, one last question.
Now you have a clause in the winding up. In the deed of trust, trust can be wound up. It will not be distributed to any. Then it will be transferred 115 TD compliance. But how do you close this trust? Should you go to sub-register? Under which law you do that? That's a big question. Suppose there is a specific enactment, like Tamil Nadu Charity Act and all, there is a procedure that you do that. In the absence of that, you do all that. But can you surrender 12AB certificate? How do you do this? Suppose I don't want exemption. Okay? I don't want to close. There are two things. One is closing, another is I don't want to close the trust. But I want to surrender my 12AB. I don't want exemption. Can I do that? Is there any power for the commissioner to accept this 12AB surrendering of that? This question came. In which case? Tata Trust case. Tata Trust case, what happened? March 2015, they said, we don't want exemption. Of course, they won't get exemption also because it is a trust in which they held the shares of the all Tata Group companies. So that is a violation under section 13(1)(d). As a result, in 2015 they said we will surrender 12A certificate. They surrendered. I don't want this. Then commissioner did not know what to do because there is no law, there is no rules. He has kept quiet. Then in 2017, law was amended, 115 TD, that is taxing on accreted income has come in. Suddenly he became Josh. In 2019, he took up the case, he cancelled the registration. What was the value of the asset as on 31/3/2019? He brought it, liability subtracted, and he has taxed them. Then this matter went on. Finally came to the Bombay Tribunal. Then Bombay Tribunal members said, when they made an application in 2015, you should have acted upon that. Then Commissioner said, I don't have the law to do that. Then what do I do? Just because 115 TD came now, you can't tax them like this. Therefore, this is illegal. Now, tips I will give all of you. Though surrendering of certificate is not mentioned in the law. In FCRA there is, you can surrender. There is a process. Income tax law there is no reference to surrender of certificate. But you can surrender. You can close this. If you go to the income tax portal, there is a specific mention of the surrender of certificate. There, if there are no assets, no liabilities, you have already given to so many and all that, based on which you can close the financials. Board of Trustees can present this. They can surrender this 12AB certificate. It will go to the Commissioner of Income Tax. Then it will go to the jurisdiction EMO. He will look at all your tax records whether you filed it, based on which he will give no objection to the Commissioner, based on which Commissioner will pass order that closure of this trust. This is how it is done. Now there is in the portal, surrender of certificate is being brought in. You can do that. No issue of that. Alright. Last questions for the day. Okay? Give him the mic.
Sir, if there is a trust which has taken 1023 registration but not 80G, and subsequently they want to take a registration under 80G, then there is a condition that they shouldn't have utilized the benefit of 1023C in the previous years, prior to the date of application under 80G. Now, how do we find a
So once they have registered under 1023C, that means complaint, no?
Yeah, it is complaint, but for the when we apply, there is in the application they have brought this new undertaking.
Yes, that is complaint or utilized. Because when you have a 1023C, when you are claiming exemption, you file the return of income.
Yes.
In the return of income, you are claiming exemption.
Yes.
That is sufficient. Only thing is whether specific way up to 5 crores exemption is claimed, for which 80G you are going, you check that. But there is no problem in that. You can claim.
Okay.
80G is a separate. Though there is a mention, yes, 1023C. Whatever the tax return filed and all that, you enclose. Financial statement you enclose. Based on which exemption will be. 80G approval will be given.
Okay.
Not an issue.
But the office's point was, I shouldn't have claimed the exemption under 1023C.
Why? So that means you are saying, as I said, solely for charitable purpose. Educational purpose which has other classes. Therefore, even if it is not said, this has nothing to do with that. That is 1023C.
Okay.
That is, he has to come back on 1023, issue a notice. In 80G, he cannot brought this as a condition for rejecting your 80G. You make a fit out reply to him.
Thank you.
Okay, thank you all again, please.